When we're talking about some of these companies, AI continues to be this buzzword. We were talking with our reporters earlier about Samsung, about NVIDIA as well. This idea that it feels like there's been so much excitement and acceleration around it. This feels like the year of execution. Would you agree?
I would, totally. I think if you go back to, I think it was McKinsey that came up with the idea of the hype cycle. And quite often things get really crazy, and then there's this void as actual things get implemented. You can think about that back with 3G, 4G, 5G, or AR, VR. AI certainly went through a lot of hype in 2023. But interestingly, we just published, I think, a pretty notable CIO survey yesterday. And in it, what was very clear is there's only little projects that have hit the ground. In 2024 and into 25, which will impact expectations this year, we see the likelihood of AI implementation, plus actually a bigger, broader IT services spending wave that picks up in the second half. So companies like Accenture and Google or Alphabet are right smack in that drive. But you've also got application companies, if you will, that play into it. So think about Adobe. Really complicated stuff if you get into things like Photoshop or Premiere, or interesting Match, Tinder and some of their dating apps. They're using AI to better select photos. So there's all sorts of interesting elements. Intuit's another name that plays with AI. It's tax prep in the U.S., but AI can enhance that whole process. So I think it's an interesting year as far as some of these companies go.
But execution also comes with crucial management and leadership skills as well. You mentioned Match and Tinder, for example, but the name that came to mind was Bumble and the founder stepping down from this business that she had really built. And it begs the question of how much some of those visions can still be executed with the right leadership. What are you monitoring there?
Well, so it is interesting. There are a couple of management change stories that we have on the list, and totally different from the world of technology. But Union Pacific in the U.S., it's a big railroad company. Yeah. They've got a new guy coming on that is leading the charge for the company on what they're calling precision railroads. It's essentially super accurate timing in terms of when you pick up, when you leave, and this, that, and the other with their commercial traffic. You've got BT here in the UK. We've had years of disappointment in various ways. There's agitation going on from the standpoint of shareholders. Alison Kirby is coming in, and we've got pretty good faith that she can implement change and start to drive positive revision after years of negative revision. So management's quite key.
So we're talking a little bit about the micro here, the vision, how to create more in 2024 after already some pretty blockbuster couple of years that we've seen for corporate America and fairly corporate Europe as well. And we'll throw corporate Asia in there, just give them a little love. But talk to us a little bit about the macroeconomic picture. I feel like for so much of the time, especially when it comes to these massive cash piles that a lot of these corporations had around the world, the question was, well, is that cash pile worth that much in an environment with higher interest rates? Now that we're talking about rate cuts being priced into this market, do we care that much about the macro?
Well, I mean, I think the answer is yes. And
I'd be very surprised if you said no.
Exactly. It does look to us that we're shaping up into one of these classic tale of two halves. If you look at the move that we had from the standpoint of expectations of central bank pivoting in the last 2 months, along with the reaction that played through in terms of bond markets and interest rates, or stock markets with the massive rally we had, primarily due to valuation uplift with lower rates, it sets a real hurdle for us, especially as we go into a period like fourth quarter earnings that here in Europe we think could be a challenge. Worse than what we saw in the third quarter, which was a pretty sorry earnings reporting period, all else being equal. Second half of the year, however, if you start seeing interest rates indeed play through and recovery starting to gain some steam, as well as looking into next year, which we'll do in the second half of the year. The second half could be pretty interesting. So, we had the setup with starting from a very high level in January 1st that obviously we've already given some back. It's the opposite of what we saw last year, where there was a sell-off going into the end of 2022 that ended up creating a first half liftoff.